Hello, this is First Principles, and it is September the 2nd. Today we'll be taking a look at the pricing of Nvidia as a company. Please note that information discussed here is for informational purposes only and not intended for investment advice. Please always conduct your own research before making any investment decisions, and any decisions that you make is your own responsibility. And now with that out of the way, let's take a look at Nvidia as a company. So let's quickly take a look at the summary of events. And as of September the 1st, the closing price of Nvidia was at $485.09. And their market capitalization is at $1.2 trillion. So with these numbers out there, the big question is, what does these valuations mean? And we can take a look at the last few of their quarterly reports and the results of these, and then put the numbers into context. So if we take a look at their most recent quarterly report, which came out in August 28th, they ended the quarter with revenues of 13.51 billion, and their growth quarter on quarter was 88%, and a annual growth from the previous year was up 101%. If we take a look one quarter before that, their revenue was 7.192 billion, and their quarter on quarter growth was 18.9%. And finally, their last quarterly report as of the end of January 2023 was at 6.05 billion and only 2% up from the previous quarter. So we can see that the revenues has quickly gone up over the last 2 or 3 quarters, resulting in a really fast pace of their take up in terms of their hardware. And this is mainly because of the release of the ChatGPT and the real big interest around AI models and large language models that is driving this growth. So if we were to take a look at the reports from Nvidia, I think the important thing to take a look here is how do we go from the revenues to their cash flows and come up with a price for this company. And given the numbers and the growth rates that we've seen here, what kind of growth do we need to see in the future to justify the price that we're seeing for Nvidia right now? And just to put things into a little bit of context, let's add in a few potential risks that I personally see for the company itself. Is that in the AI modeling space, there's a lot of work being done to optimize the amount of compute power that's needed to do inference and training. And what I'm seeing here is that as development in the space goes further along, people are finding ways to make the training to be more efficient, trying to reduce the amount of work that's needed for the GPUs for training, and also for inference, which is when you throw a prompt or data at it, how you get the data out. And the other risks that we see in this space is potentially AMD or Intel and other chip makers bringing to market other alternative hardware for AI-related work. So AI and Intel themselves, AMD and Intel are well-known chip manufacturers. AMD has their own GPU line. Intel has dabbled in the video card market before for integrated graphics chips, and they're probably working on some kind of hardware to compete and get into this market space. And not leaving out other potential competitors, cloud providers like AWS themselves actually now offer their own custom chips in the cloud for training and inference. And if we were to take a look at AWS themselves, if you can take a look here at the AWS page, they actually have specific AWS instance types which are for inference and training, and they've made them available as part of their platform. And while the hardware is new, they're working with the libraries and providers out there, model providers out there, to make the software stack compatible to their hardware. And likely their hardware will be cheaper than what Nvidia offers, and potentially reduce the demand for their hardware. Now, coming back to Nvidia and looking at the model for pricing of them, here's a Google sheet that I've put together that has all of their quarterly reports calculated as the trailing 12-month numbers. And the publication starts from their Q2 of 2023 and goes back. So if we look at the trailing 12-month numbers, um, for their numbers reported in August, their trailing 12-month number revenues is around 32 billion, 32.6 billion dollars in revenue, and they had an income of around 10.3 billion dollars. Now, given that the stock price is hovering at around 485 dollars, the question becomes, what are the kinds of scenarios is the market um, expecting in terms of growth for Nvidia to hit this valuation? So if we come back to this model, I'm going to model the rate of return for myself at around 11%. I'm putting in a 6.75% premium on top of the 10-year Treasury bond rate. And then after that, what I can do here is put in some growth rates um, over, say, the next 100 years, and then calculate what would the discounted cash flows look like for Nvidia, and then calculate the net present value of this company. And then what I'll also be doing is I'll take the equity value of everything that the company has in terms of their assets, and then apply a 50% haircut to them, just to be conservative. And then we'll add this number to the discounted cash flow value and divide that by the number of shares to come out with a share price. So we can see here what I've put into the model, starting from, say, next year, putting in, say, a 50% growth rate. Then after that, this tapers down to 30% by year 6, then 10% by year 11, and then after that, we have it taper off to 2% as a steady state rate, assuming no more growth, because 2% is sort of like the target rate of inflation within the economy, and this is the number we'll put in for when a company is no longer growing. So this is sort of the steady state, and then this will allow us to calculate a terminal value for this company. So putting that in, what we'll have is that we'll have the net income grow, and then after that we'll compute the discounted cash flows, and then add these values all back together to come back with a total DCF total of this company for out to about 100 years. And you can see as we go out further, the number drops off rapidly. So we can say here that the value of the money that is brought in at the later years diminishes rapidly. So that comes down to like some kind of terminal value. And most of the important numbers will be coming out in the first, say, 30 odd years. So given that, what I put in for this pricing model here, the company will need to hit this growth rate to have a calculated share price of about $476. And then what we're looking at in terms of the net income, probably at the highest point, we'll say that around the 11th year is probably be around the biggest point here in terms of the net income, is about $175.5 billion in terms of net income. And if we compare this number versus their trailing 12-month net income, they have to at least 17.5x their net income. And what that also means is that looks like they're getting for the time being, a 33% margin compared to their revenues to net income. You can see here that the revenue to net income previously was much lower, so about 4.7 billion to 25. So that is under 20%. So we can see here that the margins have definitely jumped up recently for Nvidia. The question becomes, will those margins be sustainable in the long run? That'll be up to people to say, but let's just say this is going to be like a 3x number. They maintain those margins for 3x. And after 11 years, so we'll click over here, they have to multiply this by 3 times. So if we take this number, multiply by 3, and that brings us to about $500 billion in terms of revenue that Nvidia needs to do in terms of sales. That is pretty huge in the next 11 years. But at least that is what the model is telling us in terms of what they need to hit to hit about $476 in share price. We can play around with this numbers a little bit more to tweak it to get it closer to 485. So we could say maybe the growth rate here could be maybe 53% in the first year and then tapers down to about 30. So we're talking about a pretty small kind of change here in terms of the growth rate. So I'm fairly confident maybe this is what the market is sort of pricing. So what will happen is during year 1, 2, 3, 4, and 5, this tapers down to 30%. So we'll see the growth rate will start to fall from, we'll start at 50, goes to 40, 47, maybe 45 and 42, and then drop down to 30. And then from here, it'll drop down to 10. So this is what the model is expecting. So unless, so this is just with the current business line that they have. One other potential thing that could happen is that Nvidia finds some kind of new revenue stream for them to justify this price. But as of the time being, this is pretty aggressive in terms of what Nvidia needs to accomplish within the next 10 years. So with this becoming the baseline, if you're expecting Nvidia to have their stock price increase beyond this, say if you want to get maybe a 10%, 20%, 30% increase in share price beyond this, so your pricing maybe the company would be 510, 520, or $530. What you need to do is you need to come up with a story to say how do their revenues and then from there their margins relate to the net income for them to get to the cash flow to justify that price. So looking at these numbers right now, you can see that a lot of their future growth, at least for the next 10 years, at this growth curve, has been priced in. And the real question becomes, will it be able to hit it with the way things are? And then also, while they're doing that, they need to fend off potential competition from other chip vendors that are coming in, or the market changing in terms of the landscape of AI changing that could potentially move against them. So for that part, looks relatively opaque at the moment. We don't know where that might go. AI could be a huge thing. We've already been it's almost been about 10 months since ChatGPT has come out. The question becomes, has there been any really breakthrough applications where people are using it in their businesses and daily activities as of the moment? Personally, from my point of view, I don't see it there just yet, but things are still evolving very quickly. So if it really does gain traction, maybe things could really change and move in this direction. So this will be something interesting to watch at the moment. So if you are going to make a bet on this company, you're going to need to find a way to tell a story where Nvidia is going to be able to hit $175 billion in terms of revenue, net income, which is 17.5x their net income within the next 10 years. So if you can tell that story and it's going to be above that number, then that's the way you'll be able to have a story to buy this company. Otherwise, it's best to sit out and think about where things are going to go. So that covers my quick analysis of Nvidia, the company, and hope this has been helpful for you. Thank you.